Stop worrying about AI competition eating Nvidia's lunch. Seriously. If you think AMD or custom chips are about to dethrone Nvidia, Japan just sent you a $325 million reality check. Here is the counterintuitive truth that the bears don't want you to understand. Nvidia's next-generation chips are in higher demand than ever. Japanese AI company Datasection just ordered $325 million worth of AI servers powered by Nvidia's B300 GPUs. 635 servers, contracted through Compal Electronics in Taiwan. This is not a small pilot program. This is a serious infrastructure investment, and it's happening in Japan, a country that is aggressively re-establishing itself as an AI hub. Let me break down why this deal matters more than most headlines. And stay until the end for the 3 secrets that will change how you view every Nvidia demand signal from now on. I'll admit something. When AMD announced their MI400 series last month, I wondered, is Nvidia's dominance finally under threat? Then I saw this deal, and I realized the AI infrastructure build-out is so massive that there's room for multiple players. But Nvidia is still the one everyone calls first. Today, I'm going to show you exactly what this Japanese order means. We're going to look at the Datasection deal, the B300 chip that everyone wants, the Asian AI boom that Wall Street is underestimating, and why competition is not the biggest risk to Nvidia's growth story. By the end, you will understand why Nvidia's pre-market pop was just the beginning. Stay with me. Let's start with the actual deal. The customer. Datasection, a Japanese AI-focused company. The supplier, Compal Electronics, based in Taiwan. The product, AI servers running Nvidia's B300 GPUs. The quantity, 635 servers. The value, approximately $325 million. The B300 chip. This is Nvidia's next-generation AI GPU, the successor to the H100 and B200 series. It offers significant performance improvements for both AI training and inference. Why this matters? This is not a speculative order. This is a real company spending real money on real infrastructure. Datasection is betting that AI demand will continue to grow, and they're betting on Nvidia hardware. The counterintuitive truth? While analysts debate whether AI spending is slowing down, companies like Datasection are writing 9-figure checks. The debate is happening in boardrooms and in news headlines, but the money is flowing to Nvidia. Now let me zoom out, because this isn't just one company buying servers. This is part of a pattern. Asia is in the middle of an AI infrastructure boom. Japan. The Japanese government is aggressively re-establishing the country as an AI hub. Subsidies, tax incentives, national AI strategy. Companies like Datasection are the tip of the iceberg. South Korea, Samsung, and SK Hynix are spending billions on AI chip production. Taiwan TSMC is expanding capacity as fast as humanly possible. Singapore. The government has committed billions to AI research and compute infrastructure. The counterintuitive truth? US investors are obsessed with American hyperscalers, Microsoft, Google, Amazon, Meta. But Asian companies and governments are pouring money into AI infrastructure too. And most of those orders? Nvidia gets the first call. Now let me address the question every Nvidia investor is asking. Is competition a threat? Yes, but not as much as headlines suggest. AMD's MI400 series. AMD is making progress. Their MI300 series won some design wins. The MI400 is expected to be competitive, but winning some deals is different from winning most deals. Custom chips, Microsoft, Google, Amazon, and Meta are all designing their own AI chips. For specific workloads, custom chips can be more efficient. But for general AI infrastructure, Nvidia remains the default choice. The counterintuitive truth? The AI infrastructure market is growing so fast that there's room for multiple winners. Nvidia's revenue is growing 50 to 100% annually. AMD could double their AI revenue and still be a fraction of Nvidia's size. The real risk is not competition. The real risk is a slowdown in AI spending. And this $325 million order suggests spending is not slowing down. Competition is real. So is Nvidia's moat. Let me leave you with the 3 secrets that connect everything we just discussed. Secret number 1, the one deal misinterpretation. A single $325 million order is not material for a $5 trillion company. But it is a data point. And the data point says, AI infrastructure spending is happening everywhere, not just in America. When Japan, Korea, Taiwan, and Singapore are all writing checks, that's a trend, not an anomaly. Secret number 2, the software moat invisibility. Hardware specs are easy to compare. Clock speeds, memory bandwidth, teraflops. Software moats are invisible, but they're the hardest to overcome. Nvidia's CUDA ecosystem is a decade ahead of any competitor. That's why Datasection chose Nvidia, not AMD. Secret number 3, the Asia blind spot. Most US investors focus on US hyperscalers, but Asia is building AI infrastructure at an accelerating pace. Japanese government subsidies, Korean chaebol spending, Taiwanese manufacturing expansion, Singaporean sovereign wealth funds. If you're not watching Asia, you're missing half the demand story. So what should you actually do with this information? If you already own Nvidia, this deal confirms what you already believe. Demand remains strong, but don't trade on one order. Watch the broader pattern. If every week brings another $100 million plus order from a different region, that's confirmation. If you are considering buying, Nvidia is trading at a discount to recent highs. Competition fears have created uncertainty. Uncertainty creates opportunity. But remember, Nvidia is still a cyclical semiconductor company. AI demand could slow. Watch for signs of deceleration. If you are an Nvidia bear, your thesis needs to account for deals like this: Japan, Taiwan, Korea. These are not small markets. If AI spending is slowing, why are companies still writing $325 million checks? The counterintuitive truth? The best time to buy Nvidia is when headlines are screaming about competition. Because that's when fear creates price weakness, and the underlying demand remains strong. Here's my question for you. Do you think Nvidia can maintain its dominance as Asian AI spending accelerates? Or will local competitors eventually win? Drop your answer in the comments. I read every single one. Like and subscribe if you want more myth-busting analysis on Nvidia and AI stocks before the crowd figures it out. I'll see you in the next video.